Good morning, retail traders. This is Tie Sunday. Got tie on. Always like to do my videos on Sunday, which show the stock market a little bit of respect, which has really been doing very well, in my opinion, the way I trade. And this is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. So I started trading about 21 years ago, and I've developed my own little strategy. It kind of crystallized here in the last 3 to 4 years, and it's called the sneaky snake trading strategy, where I talk about chart patterns, the moving averages, and being in the know, being in the now. I mean, being update with the market and how the fat cats trade and how they're talking, and a little bit of politics, because that kind of has somewhat somehow shaped the stock market here lately. Used to not be like that, but now it is. So you got to pay a little bit of attention about how the politics are going, and there's been a big change. The government's not in charge of dealing out the money like they did to Wall Street. We put a stop to that, and I think that's going to be very beneficial to the market. Then you can go back to your fundamental trading and however you do. But right now I'm a technical trader. I read on the technical things, and I still want to be in the now. I think that's the most important part of the trade. It's all about being psyched up and psychologically coming in a good mood and being happy. So today's video, I'm going to talk about how I look for the support levels on the SPY and the SPX every morning before the bell rings, and what I expect from the day. Now, I know that we've had a real good hard sell-off, and you can tell by the charts, and I'm going to point that out here real shortly. So let's go ahead and take down this, put it to the side. Basically, this is my setup. I have what you call the TV running here on the left, or on your left, and also we'll have my message center up here that gives me my alerts. Right now it says we're bullish, but we'll see how that goes. I'm starting to feel bullish myself. I think we hit a real good technical spot in the charts with the inflation numbers coming out better than they expected. They expected a lot worse. We've been hearing nothing but tariffs and inflation. Well, let me tell you something. If you control the government spending when they get way out of touch, inflation will go down, period. The more they print, the higher inflation will go. And I'm a true believer of that. We went through a lot of money in the last 4 years that was not necessary, and it gave us 21% average inflation throughout the country. And that was just and then the market run way out of touch. It ran up 40% in 2 years compared to what should be a 7% average each trading season. But the last 2 years we went up 40%. It should only went up like 14 to be reasonable. So a pullback is expected. Now Wall Street's purposely bringing the market down with the tariff talk and recession talk, and last week's numbers prove that inflation is going down, which is beneficial to the private sector and to the poor. The rich don't give a crap. They've got the money. It doesn't hurt them one bit. Inflation this, inflation that. They don't even know what inflation is. But when you're in the middle class and you see used car sales go up 30%, you see meat go up 100%, groceries going up 40 to 50%, there's a problem. So let's go ahead, and this is my SPY, and I'm going to go ahead and take these back down here. Just kind of showing you about how my setup is in the morning, and I have my watch list up on top. And you can see we had a green watch list come Friday, and then if we move this to volume high, still green. We had a nice little bounce up from the bottom at 549.68, and this is kind of how I like to do my watch list. But first I want to take it to different time frames, and the first one I'll take it to would be I'll even go back as far as a month candlestick patterns, and I haven't done that here lately, but let's go ahead and look at them. See, on the monthly, we went below the 9. Now, this is when my moving averages come into play. And if we still are going to get some more drama, we could come back to about 530 and hit that 21. But I'm going to use the weekly right now to kind of chart these out. And we got 3-year weekly. 3 years, we went from 348.11 all the way up to 613, almost a 100% increase in the market in 3 years. It's way too much. We need a pullback. I don't care about inflation. I don't care about tariff talk. We went way too much. Period. Way too much. Over 100% in 3 years, when your average year is only supposed to be like 7% on an average. You'll have 14%, you'll have, 5%, but basically 7% average. And that's what? 14% over 100%, 90%? That's way too much. So we did pull back to a very major support level here. And the way I got my moving averages is I use, you can jot these down and do a chart like mine if you like. I got the EMAs, which is the 9, the 21, the 63, and the 200. Now on the simple moving averages, I need to put the 50 on here. I don't see it on here, so I will put that 50 on here. Let's put it on here now. Put the 50 moving average on here. I like to keep my 50 moving average at the green. That's the simple. So we hit apply and OK. So we've got the 50-day here on the weekly. And that's going to be a resistance level or a support level. We'll probably break that. And that'll become a lot more bullish, and we'll run it up to the 21. So I'm going to put a price line in here at the 50 SMA, which right now is around, what, 562.81. And I'm going to adjust mine to where I think it should be, right around 564.31, right on top of the body of that candle right there. And then the 63, I'm going to put another price line right there at 551.26. So that's going to be our new support channel on the weekly time frame. And then running the resistance level would have to be somewhere around 567.57 come Monday to start to be very bullish. And then long about 575. So I'll take these now. I'm using the bodies of the candle for resistance levels and support levels. You see this here wick came down and hit that 50 SMA right there and bounced up. And then the last week we had that pullback. So we've had a pretty good strong pullback. We had 3 black crows right here with a hammer. Now I like that hammer down there at the bottom, and I'm going to bring this to the daily. Magnify this up. Now on the daily, we got to break the 9 to become resistance. So we're going to keep that 567.57 for a real hard resistance level to break. And then that 200 SMA and EMA are going to be your next support levels. So we're going to put a price line at the 200 EMA and one at the 200 SMA. And we're going to use the bottom of the body of that candle right there for a guideline. Now I'm going to take it to the 1 hour time frame. Now I want to do one thing right here just to keep it a constant reminder. I want to change this property right here of the 200 to a different color, and I'm going to make that red. I'm going to take the EMA and I'm going to make that red. Let me see here. Looks to me like I don't know what that's on there. Let's see. Let's remove a 5. So it's the 5. We're going to put that back on. No, that's better. I don't know what was going on there. And we're going to change that to a red. So I know that that's going to be my squeeze place where I need to go once the 9 breaks on the daily, but we're going to use that 567.57. So now I take it to the 1 hour. I'm using the bodies of the candles. I'm going to take it to the 20-day 1 hour. And I'm going to see if there's anything on here. So right now, this here is a major support level. So I'm going to go ahead and put a price line right there, right on top of that wick. And I'm going to change that to a blue. These are all major places that I want to pay attention to when we get up to that higher level. But for right now, on the 1 hour time frame, we got a little overhead resistance right here. We actually got a double top. See this double top right here? This one here is broke it, but this one here is a double top. So we're going to put a price line right there. And that's going to be our major resistance level to break, and we're going to make that blue. So looking at the hour time frame, I'm going to jot it down here. I'm going to say we got to break a double top 562.72 this coming week and stay above that. As you can see, last week that was a major resistance level, and we just could not break it. We broke it a little bit there on Tuesday morning, but the thing pulled back and couldn't get back up there. Got back up there again, and then got back up there again. So if we come out Monday breaking that resistance level, I think we can move on up and hit this 200 SMA and EMA and call that a long until our next resistance hits. And then we got the resistance channel of these two different 3 right here. It'll be resistance 1, 2, and 3. But for right now, on the 1 hour time frame, this on the 5 days, your pivot point area is going to be right at 562.72. A pivot point is a major position in the market where it decides if it wants to break a resistance up to resistance or if it wants to pull back and find support. So let's go ahead and jot in right up here. SPY. Whoops. Why ain't that capitalized? SPY pivot point is 562.72. And then I'm going to put in support level. Then we're going to go ahead and write in a support level here. Let's make this a little bit bigger. Let's make it a little bit smaller. Support level. It's kind of choppy here on the support level, but you see there's a little trend that comes down, and that's going to be your low support. And we're going to draw that in with a trend line. Take it from the body of that candle on down. And that's going to be your low support right down in here. And we're going to verify it with this head and shoulders. You got a head and shoulders right here. So let's go ahead and put that trend line in there at the head and shoulders. Left shoulder, right shoulder, left shoulder, head, and right shoulder. So the inverse head and shoulders is going to be your low support. It's going to be a low support channel right here for a strong buy if it decides to pull back next week. I'm looking at the weekly outlook, and I do this every day when I come in and I adjust as we go. So we're going to put a little shadow box in here from the top of this trend line right here, which is the bottom of that candle over on this side right here. I'm looking for relevance as you go back to try to equal out what I'm seeing right here. And I see these wicks right here, and I see the bodies right here. So I'm going to start my box right in there, and I'm going to bring it all the way down to the bottom of that there, whatever that was at 520, 551.26. I can't remember quite. So that's going to be your low support, and we're going to type that in the room. And I'm going to go ahead and put a price line. Let's cancel that. Let's put a price line. So as you know, I don't let a lot of algorithms decide where I think support level and resistance level is. I'm using what's already been. You know what I'm saying? I think mine are more accurate than what you could get on an algorithm or anything like that. So we're going to put low support, strong buy. At 551.26 to 554.11. We're going to change that black so we can see it. Hit OK, and there you go. So that's going to be your low support, and we're going to type that in up here at the top. Let's change this to a smaller print. Guess I could have kept it there after all. I want to be able to put all this in here. The next support is going to be the previous high right here. And we're going to use the body of that candle right there. That's the previous high that we had. And we're going to draw a price line right across there. So that's going to be the first support, right at 559.26. And we're going to, yeah, we'll just leave that the way it is. First support, 559.26. So basically I've got what I need, and resistance to break will be the 200 SMA. And that's going to be right around that blue line at 567.02. Resistance to break. That means we have to hit that resistance at 567.02 for it to go to higher levels. Then I've got my other three marks that I can take them up to and use each step as an exit idea or a scale in idea if in case we get some real good news, even use it farther down the week. But 567.02 is going to be the major resistance to break next week. And that's going to be 562.02. And that's it, basically. I'm going to move this down a little bit so I can see it a little bit better. So that's more or less how we're going to look at the SPY next week. We have a support level, and then I'll keep using these moving averages on the 1 hour time frame for support levels throughout the day. and bring it on down. Now I look at it one more way. When I come in Monday, I've got my information. The SPY pivot point this week is going to be 562.72. If we can break that, start to build above it, we'll start to go higher and the market will be more bullish. If it can't break the 562.72, I'm going to be looking at the first support at 559.26. And then if that doesn't hold, I've got these other moving averages that I can use, which is the 63 and the 50. You notice the 21 lands on that 559.26. So that's going to be a major support level, the 21 EMA. Then I've got the 63 and I've got the 50 SMA, and then I've got the strong buy signal right down here on an inverse head and shoulders. And I'm going to type that in down here. Inverse head and shoulders support to stay bullish all week will be no lower than 554.11. So I'm going to type it inverse shoulders at 554.11. You can go a little bit below it, but I'm going to keep a good eye on that chart pattern because I think that could be a major support level before it even gets down to the strong buy area, which is the head of that inverse head and shoulders. See what I'm saying? Then the weekly low is 549.68 if it gets down that far. But I think we're going to break that 562.72 this week. It's had 4 different attempts. And if you can count to 4, you can make a little bit more. If you can count to 3, you can trade with me. So a lot of times you'll see it come down and hit that inverse head and shoulders the second time and then go ahead and break out. But for right now, that 562.72 is a very important number that we've got to pay real close attention to next week, this coming Monday. And then when I'm in here and I'm looking at the 1 minute, I'm going to be looking at other support levels to start day trading, like this higher low right here. I'll put in a little trend line on that higher low, but I'll start it from right here and move it on up. So that's a double confirmation of 559.26, that first support. So that's a major support level right there to go ahead and try to get into. And we'll see how that works. If it does pull back, I might be going, long for the day at 559.26 if we can hold that first support or break that pivot point at 562.72. That's basically how you chart that up. And let me see what else I'm thinking. So let's go ahead and look at the SPX real fast. It don't open up until the bell rings. And I love trading the SPX. So I'll go to the weekly time frame on it also. And we hit that 63 EMA. And I'm just going to go through this a little bit faster, show you how long it takes me to set this thing up. I'm going to get a price line. I'm going to put it right on the 63, right on the 50, and right on the 21. Then I know that we had a double bottom that didn't hold right here, and I'm going to put that in there too. I go straight to the daily. We broke below the 200, so that means we're in bear market right now, and we got to try to break that resistance. That's the EMA and the SMA and then the 9. So if we can get up to that channel and hold that up, and we're going to put a mark right there at the 200 SMA and make that red. And then we've got the 9 right here, and that's where if we can stay above the 9, we can start to become bullish. But still yet, we still got to break that 200. So that's going to be like your little pivot point area. And if we can get up to that area, you might pause, have a little consolidation, It'll make up its mind if it wants to break the 200 SMA, because that's an important resistance, a real important resistance, a very important resistance. I can't emphasize that enough. If we break the 200, we'll start running this thing back up and find that resistance level, which would have been this here bottom right here at $5,777.75. Then keep running up and try to break these moving averages. So now I'm going to take it to the 1 hour. I think that's beautiful. I don't want to mess with this too much. Support level, again, is going to be the inverse head and shoulders. So we're going to draw a trend line. I'm looking for chart patterns and moving averages. So that's going to be a major support level at 569 something. If we can pull back to $5,570.58, I think we could hold that and then be good for the day and run it back up to the 50 SMA. So the 50 SMA is going to be your resistance level to break. And we did kind of break it. You can see here by the top of this here inverse head and shoulders. And that's called a neckline. That's called a neckline. And if we can break that or hold that, we did break it. And if we can hold that, that's going to mean we could become very bullish in the SPX. But we got to remember, we're in the now, and we got to deal with them fat cats. You know, they're not as smart as us. They're fundamental traders. And if they were fundamental traders, they'd still be in the trade, right? But they're not. The market pulled back anyway on technical indicators, because all their earnings were good. If they're fundamental traders, we should be keep going up, keep going up, keep going up. But we're not. We're way overbought. Their fundamentals suck. Yeah, I said it. So if we can break these 50 SMA, we can jump up and break the 63 and get up into this resistance channel, which is the pivot point for next week, and start to run this baby up to the 200 EMA and the 200 SMA this coming week. Or we pull back and find a balance off that inverse head and shoulders, but that neckline, we broke that neckline. That's huge. You know, that's kind of an indication that maybe we're going to have a good week this coming week. But we're competing with billionaires and millionaires, these fundamental traders that are tongue-tied and don't know I know what to expect, because I'm a technical trader. I don't let them fundamentals and I don't let that politics interfere with my trading too much. They do, because they're getting cut off and they don't know how to trade without that free money coming in. So we'll see how this goes. That's basically how I chart these up. I'm looking for chart patterns. I'm trading with moving averages, and I'm being in the now. And I wish everybody a great week next week. I'm Washboardjim with the Sneaky Snake Trading Strategy. Please watch this video over again if you're new to trading. And if you have to watch it 3 or 4 times, make a comment down below if you see something, if you think I should be looking at something else, or if you picked up anything off this here video. This is more or less a seminar on how I look at the market when I come in every morning, and I'll adjust that every day. The moving averages move, so I got to keep adjusting my resistance levels and my support levels by a day-by-day basis. So everybody have a great day, and we'll catch you later, buddies. Bye-bye. Sneaky Snake Trading.